everyone, another week and another piece on cannabis financing. As today we explain what GAAP reporting is, why do cannabis companies use it? We're going to break down why it matters, why cannabis companies, like many others, rely on it for their financial disclosures. We're also going to use a company as an example. And this time, we're going to give Tilray as an example and based on their latest earnings. So, let's begin. First, GAAP stands for Generally Accepted Accounting Principles, which are the standard accounting rules and guidelines used by public companies in the United States. These rules ensure that financial statements are consistent, transparent, and comparable across different industries. But you might ask, why is GAAP so important, especially for cannabis companies? Well, let's find out. Cannabis companies, like others that are publicly traded, they must follow GAAP to comply with U.S. regulations, ensuring they present their financial performance in a reliable way to investors, regulators, and the public. GAAP requires companies to disclose their revenues, costs, profits, assets, and liabilities, clearly making it easier for investors to understand the financial health of a business. So GAAP covers key accounting principles. They include revenue recognition, when a company should report its sales, cost accounting, how a company tracks the cost of its products, expense matching, making sure that revenues and their related expenses are reported in the same period. For cannabis companies, many of which are rapidly growing, GAAP is crucial for building trust with its investors. It ensures that companies are not only reporting on high growth numbers, but also following the same rigorous standards as other public companies in other industries. So let's take a look at Tilray as an example, which many of you know is one of the largest cannabis companies in the industry. In their first quarter fiscal year 2025, Tilray reported financial highlights that adhered to GAAP standards. So here's what GAAP reporting looks like for Tilray. 1. Net revenue increased by 13%, reaching $200 million in the first quarter, compared to $177 million the same quarter last year. This is a solid growth figure, reflecting strong demand across multiple business segments. 2. Tilray's gross profit saw a significant 35% increase to $59.7 million, up from $44.2 million last year. This improved gross margin to 30% from 25%, showing that Tilray is becoming more efficient in producing and selling its products. 3. The net loss also improved under GAAP, decreasing by 38% to $34.7 million from $55.9 million last year. Under GAAP rules, this net loss includes all operating costs, interest, taxes, and depreciation. Additionally, the net loss per share improved to 4 cents compared to 10 cents in the prior year quarter, meaning that Tilray reduced its losses on a per share basis, which is good news for shareholders. Tilray's revenue comes from a few different segments, and GAAP allows us to see how each contributes to the overall picture. For example, cannabis net revenue was $61.2 million with a strong gross margin of 40%. Beverage alcohol, which is an important growing segment for Tilray, saw a 132% increase in net revenue, totaling $56 million with a gross margin of 41%. The growth was fueled by acquisitions that Tilray made. Distribution brought in $68.1 million, but the gross margin here was lower at 12%, reflecting the nature of distribution businesses, which tend to operate with slimmer margins. Wellness products such as hemp and CBD related items generated $14.8 million in revenue, up 11% with a gross margin of 32%. Overall, Tilray had revenue of $200 million for the quarter, but this was compared to the consensus estimate of $218.7 million. Under GAAP, all these figures include the full spectrum of the operating expenses, interest, taxes, and other costs that reflect the comprehensive financial health of Tilray's business. In contrast, some companies may use non-GAAP metrics, which include certain costs to give investors a view of core operational profitability. So again, for instance, Tilray's adjusted EBITDA, a non-GAAP measure, was $9.3 million for the quarter compared to $10.7 million in the prior year. Adjusted EBITDA excludes some non-operating costs and one-time expenses, offering a more focused look at Tilray's operational efficiency. So when Tilray reports its earnings using GAAP, it provides a clear, transparent view of its performance, ensuring investors and regulators see the full financial picture. GAAP standards, they help cannabis companies like Tilray maintain credibility and trust with their shareholders, even in a dynamic, fast-growing market. So what'd y'all think? Did you find this video helpful? Do you have a better understanding what GAAP reporting is? And does this give you a better idea as to what Tilray's numbers, their latest numbers, really mean? Leave some comments below. We'd love to get your feedback. As usual, smash that like button if you want to learn more about cannabis financial videos that we're producing, as well well, make sure to share this video with your network. And one more important thing, 60% of our viewers are subscribed, 40% are not. So if you haven't done so already, make sure to subscribe to our channel because we wouldn't be here without you. Thanks for watching, everyone.